As mentioned, oil prices are climbing as Ukraine war escalations raise questions over the resilience of Russian supplies. This as a group of OPEC Plus members are due to meet and assess market conditions this coming weekend. Tortoise Capital portfolio manager Rob Thummel joins us now. So does this change at all the thesis on oil?
No, I don't think so, Sarah. We think that the oil market will be oversupplied in the second half of the year, and so we'll see oil prices just continue to decline and possibly hit and move into the 50s as we exit 2025 and move into 2026.
Why not? I mean, hasn't there been this idea that if President Trump is able to come up with some sort of deal around peace, that would change the equation about Russian production and its ability to export?
Well, and that is the wild card, and it's a great observation, Sarah. So if Russia's the third largest oil producer in the world, so there's no doubt if there's less oil supply coming from Russia, that could cause the oil market to become balanced or even undersupplied. We just don't simply think that that's going to happen, and so that's why we see oil prices declining, and that's probably good for the consumer and good for inflation as well.
Did India and China over the weekend at this summit reiterate their intent to buy Russian crude?
I think so, Carl. I think India is going to have to buy Russian crude in general. I mean, obviously, the goal would be for India to buy U.S. oil. The U.S. is the largest exporter of energy in the world, and the U.S. has oil that it could export to India, and so I think that would be the ultimate goal, is for India to buy more U.S. oil, kind of like what like Europe and South Korea have agreed to buy more U.S. energy in general over the next several years.
But what about that? I mean, how do you think about the geopolitics of China and Russia making nice with Xi and Modi? Wasn't that a snub to the U.S.?
Yeah. Well, I think. At Tortoise, the way we look at it is we just look at simply, the U.S. is the largest oil producer in the world, and the U.S. is the most reliable oil producer in the world. And it's been that way for decades, and it's going to be that way for decades to come. We're one of the lowest cost producers, produce some of the lowest emissions energy in the world. And so ultimately, countries around the world, yeah, there's going to be a lot of geopolitics go around, but fundamentally, the U.S. is the place to buy energy.
Understood. What about this OPEC meeting, OPEC Plus this week? What's at stake?
Yeah, I don't think that there's going to be much of a change now. So OPEC Plus is bringing back all of the production, the voluntary production cuts that they agreed, and they're in the process of adding those volumes back to the oil supply or to the global oil market. That's why we think the oil prices are coming down, because the global oil supply that OPEC is bringing back is going to obviously exceed the demand. And we're going to have an oversupplied oil market, and so that's going to put a lot of pressure on oil prices for the second half of the year and into 2026.
Finally, rig count every Friday continues to defy expectations for even a slight uptick in the number of operating rigs. Do you think if prices stabilize here in the high 60s, that could change?
No, Carl, I think U.S. oil production, at least for now, is going to be temporarily flat to down for the rest of this year and into 2026, as the oil market needs to get balanced again, right? So if we're oversupplied, we got to get rebalanced, and part of that equation will be lower U.S. supply growth, and maybe the U.S. supply declining a bit. And so no, I don't think you're going to see a big change in the rig count. I think the rig count will probably keep declining, and U.S. oil production will be flat to down for the rest of the year and into 2026.
All right, Rob, thank you for joining us on a number of the key headlines moving oil prices. WTI just below $65 a barrel. Rob Thummel from Tortoise.